Pricing of market-linked products differs from that of traditional investments on your brokerage statement. The value reported will fluctuate and may be less than the initial amount invested. So, it's important to understand how the value of a market-linked product will be reported on your statement at various times during which you hold the investment. Market-linked products, also known as structured products, are complex investments and intended to be held until maturity. Some of the factors that may impact your statement value include, but are not limited to, fees, interest rates, underlying asset performance, market volatility, time to maturity, and issuer credit rating. After a primary offering, the initial market value of your investment will typically be discounted to reflect the approximate amount of the upfront fees, which may include administrative costs, structuring and development costs, distribution fees, as well as any commissions. But it's important to remember that all terms of the strategy, including any participation rates, caps, coupon payments, downside protections, and principal return, is based on the full initial investment amount. Regardless of which type of market-linked product you own, whether it is a market-linked CD, a principal-protected note, or a market-linked note, the value shown on your statement may not reflect either the principal or the potential coupon payments you would receive if you held the note to maturity. Throughout the life cycle of the investment, other factors will start to impact the value shown in your statement. These include interest rate movement, market volatility, and underlier performance. Volatility in any of these factors will contribute to market value fluctuations, which will generally be more pronounced the further the investment is from its maturity date. Similar movements closer to the maturity date result in less fluctuation in pricing. Changes to an issuer's existing credit rating can also affect the market value. The issuer's credit rating is monitored and reviewed on a continuous basis. Statement formats vary by firm or broker-dealer. When holding structured products, there are certain features to look for and understand. There will generally be a description of the holding and possibly name of the issuer. This hypothetical example shows a bank-issued market-linked CD with an S&P 500 index underlier. Common underliers could include individual stocks, equity indices, or indices that provide asset class diversification or exposure to popular themes. The statement will also list the issue or purchase date, the maturity date, and the initial deposit, which in this example is $100,000. As discussed earlier, your statement will show the current market value of the investment as of the date of the account statement. It should not be considered an exact valuation of what you may receive at maturity. It is also important to note that there may not be a liquid secondary market for the CD or note, and the value of the investment may be less than the principal amount if sold prior to maturity. What may not be displayed will be your minimum value at maturity. For market-linked CDs with full FDIC insurance or principal-protected notes, that amount will be 100% of the initial investment, subject to the credit risk of the issuer. For market-linked notes, the minimum value at the maturity will be dictated by the value of the underlier and the level of principal protection outlined in the offering documents. If you have any questions regarding the value of the market-linked product on your statement, speak with your financial professional and review all the relevant offering documents. Market-linked products are considered complex investments and may not be suitable for all investors.